Hi, so today I'm going through Boeing stock, considering it has been one of the most affected businesses in 2020. Maybe the dust has settled and we can see into the future a little better now. The reason that it was on my radar was because a friend in Australia blindly invested in the company because he thought it would just rebound. He was probably right, as everything has rebounded hard from those April 2020 lows. Now, I wasn't interested in the business, as I don't ever look at airline companies, but when I saw that Phil Town has put options for Boeing, well, I am now a little more motivated to see what he thinks is a good price to buy. So my plan today is to look at the industry, then the competitive advantage it has, then management and the finances. Then I'm going to try to value the business and compare that to Phil Town's valuation. Now, if you're not familiar with some of the terminology that I use in this video, look, don't worry at all. Just sit back and follow along as best you can. Look, it's part art and part science anyway. Now, for those of you who are new, well, welcome to my channel. I'm trying to help as many people as possible understand what they are actually investing in. Most people spend more time researching their next TV or their next phone than they do their next investment. I've built a reasonable size investment portfolio that I'm trying to continue growing at about 20% per year. I base a lot of my knowledge on the great investors. We're talking Peter Lynch, Warren Buffett, Charlie Munger, Mohnish Pabrai, Phil Town, of course, and a handful of others. Now, I've read Phil Town's books and he's someone who I think is a very interesting investor, and I like to see what he is investing in. And that's led me to investigate Boeing today. Boeing is the American plane manufacturer, for those who have no idea what I'm talking about, but I think everyone knows what Boeing does, so let's just move on. Okay, let me try to keep this section short, as there are probably a million things I could look at here. First, I want to try to think about why the world might need new planes in the future, where we were before all these flight restrictions. Okay, all the way back in 2019, which seems like a long time ago now, we were at all-time highs for passenger load factors and were viewed as being at the limit. This means that we could not have grown passenger demand with the existing fleet. The existing fleet are all the planes in the world at one time. Now, obviously 2020 is going to be the worst declining year on record for demand. Somewhere around 50% decline worldwide is expected. Now, a lot of people will point out that lots of airline companies are going to go bankrupt. And I agree. Airlines are generally terrible businesses with razor-thin margins already, and plenty of them are going to disappear. But Boeing shouldn't get too worried about this in the short term. Sure, some of their customers are going to be out of business, but if demand goes back to normal, then new customers will want new planes. Let's think about it logically. If the vaccine is distributed and the world is safe to travel again, well, I think people are going to travel. I can probably guarantee it. So with people wanting to travel, new airlines or the restructured airlines will need Boeing to get their planes that they need. So as long as still people travel on aeroplanes in the future, Boeing are going to be fine. Now, I'm not going to speculate on other forms of travel like drones or rockets, as I think aeroplanes are here to stay for probably the next decade. After that, I have no idea. So as long as Boeing can stay in business, they will have orders to take. It doesn't get much worse than 2020 for Boeing, so if they can survive this, things should improve. Okay, so this is going to be the big selling point for the current Boeing investors. They essentially are in a duopoly with Airbus in worldwide plane production. The expertise required to build planes at efficiency is enormous. So the years of experience they've built up is a huge barrier to entry. And another reason the competitive moat is enormous is just the cost associated with setting up the manufacturing facilities to build planes. That is not something a coder can do in his garage. And for these reasons, the business is right up there with some of the best business moats in the world that I can think of. Now, of course, it would be great to sit down with the management team and monitor how good and smart they are. That's pretty hard to do, even from reading just articles and watching YouTube clips of the CEO speaking. But there are some signs in the financials that tell us about the management. So this is their net income, and it was growing steadily before 2020. So this is their revenue chart, and as you can see, also growing nicely. Now, this is book value, and as you can see, it was declining even before the difficult 2020. This isn't something I want to see, and is an indication of a business that can't turn those sales into growing profit. And when looking at the gross margins, we see that they are only about 15% on average before 2020. Look, that sucks. For a duopoly, I thought they would have more pricing power than that. Look, Maybe Airbus is a really good competitor and is driving prices lower. Just for reference, software companies like Activision Blizzard and Electronic Arts have 75% gross margins. So it's just not as good as a business to be in, simple as that. So even though Boeing has one of the best competitive moats that I can think of, they have pretty lousy financials. I would say it's either a factor of the business model they operate or the competition from Airbus. Either way, it's pretty weak. ROIC, or return on invested capital, is a metric I love to look at for a business that is compounding their money. With 8% as their 5-year average, this really isn't that good at all, even in the good times. So look, not a good sign. Now regarding debt, this is the one area businesses can really get into trouble. Boeing has a lot of debt and issuing more and more debt throughout 2020 and probably into 2021. The US government even said they would help Boeing with their serious debt issues and give their customers, I mean the other airlines, money as well to help. Look, all of this is a real mess. This is the famous tech investor Chamath Palihapitiya speaking about Boeing and the airline industry.
Are you arguing to let airlines, for example, fail?
Yes.
Why? I mean, how does that make sense in the broader scheme of the economy?
Because when you look at what it means, this is why I'm saying, like, this is a lie that's been purported by Wall Street. When a company fails, it does not fire their employees. It goes through a packaged bankruptcy, right? If anything, what happens is the people who have the pensions inside those companies, the employees of these companies, end up owning more of the company. The people that get wiped out are the speculators that own the unsecured tranches of debt or the folks that own the equity. And by the way, those are the rules of the game. That's right, because these are the people that purport to be the most sophisticated investors in the world. They deserve to get wiped out.
So instead of going bankrupt, Boeing has issued huge amounts of debt. Look, I hate businesses with debt, especially when they're doing it just to stay alive. It could take decades, if ever, to pay this debt back. So amongst all this crazy mess, silly amounts of debt and poor financials, why is Phil Town wanting to buy Boeing? Well, I guess if the government is not going to let it fail, then there is a price when the company is worth something. Let's see if we can work out what that might be. So even if you agree or disagree with my analysis so far, the price you pay is probably the most important thing. There is no point buying an amazing business if it is going to take 100 years to return your money back to you. What we want to do is invest in a business where we're getting a good deal, so the business can keep making enough money and grow, so we make our money back as fast as possible. The share price eventually is a reflection of the value of the business. Now, 2020 has made Boeing a bit of a mess. They're losing money, there's negative free cash flow, so trying to value it, it's not easy. But what we could do for a rough guide is value it based on the 2018 numbers. Look, 2019 was a terrible year for Boeing as well, so we're actually going to be super optimistic here that they can get back to 2018 levels. Now, if you want a copy of the calculator that I'm using here, it's free and it's in the description below. So 2018 was the height of Boeing. That was their best year, so let's optimistically assume they can get here again. Analysts think the growth for the next 5 years is going to be somewhere between 4 and 12%. So let's keep the optimism going and say 10% per annum growth for the free cash flow. That's 10% of their 2018 levels, not their 2020 levels. And as you can see, with an okay margin of safety, we get a buy price at around $200. And if we go look at the stock price currently, that's about exactly where it is. So if this was 2018, well, $200 wouldn't be a bad deal at all. But we are forgetting about the pandemic and all the risks to the industry. How long will it actually take to get back to these 2018 levels? Will it ever be the same? I think I would want a far bigger margin of safety. Okay, so I made a little adjustment here and I added a bigger margin of safety. So maybe $170 would feel a bit better. Now here's a look at Phil Town's put options that he has in play right now. So look, he loves a margin of safety and he loves being conservative. So for him to think $225 and $165 is a fine buy price for the shares, well, that's pretty interesting. And by the way, if you're interested in learning about selling put options like Warren Buffett, Phil Town, and myself, check out the video I made explaining the strategy. Okay, so I think Phil Town is a smart guy, smarter than me. So I do have respect for his ideas. I think he believes if the company can get its business moving again, it could get back to its 2018 levels quickly. From 2010 to 2018, Boeing was growing at about 15% per annum, which is pretty reliable growth. Okay, I do like that they are a duopoly in a very important industry. Travel will get back up and going again, and Boeing will become profitable again. So the industry and the competition are favorable for Boeing. It might take many years to get back to these 2018 levels of free cash flow, and what about all of that increased debt? They are going to be hamstrung paying that down over the next decade. I guess if the government guarantees their business, well, the risk of bankruptcy is far lower than most other businesses. But they surprisingly have poor margins. And we also have to be realistic and see that 2019 was actually a bad year for Boeing financially speaking, before the pandemic was even a thing. I would want a serious bargain, and in saying that, the company spent quite a long time this year under $150 a share. That's probably a decent bargain. If a serious third wave comes along in the pandemic and the price goes way down, well, it's a safe bet to be okay in the long term, since the government's probably going to look after it. Anyway, at $200, do I think Boeing is a good company to invest in? Now, I do think Phil Town's $165 price is not a bad play for those who think differently about this one than me. I think even I could get on board if the price went to say $120. That would be about a 75% discount to their 2018 fair value. Now, if you haven't done so already, don't forget to subscribe to my channel to not miss any of my future videos. Hit me up in the comments if you have an opinion about Boeing as well. There is a lot more to this company that I didn't cover, but I think I got through the most relevant stuff. Obviously, you will need to investigate a lot further if you want to invest yourself. Look, thanks for staying to the end, and I will see you in the next video.